Good morning. It is August the 22nd, 2016. Time to kick off another week trading. As usual, on Monday morning, we don't have a lot going, and we're already seeing articles that this week's meeting in Jackson Hole will sideline everybody, and that Janet Yellen and the other people that speak supposedly will be pushing for interest rate hikes. Again, that they may do rhetorically, but I just can't see them doing anything to wreck the stock market before the presidential elections right now. Nobody wants to take on the White House. Pretty cut and dry. We've got Chicago Fed National Activity Index last month. It was plus 1.16 or plus 1.8. Had been negative up to that time. So this week's Jackson Hole Fed conference is likely to hold the market in a trading range. Treasuries have been run down into this announcement in anticipation of a hawkish statement from Yellen and the crew. Stock market is treading water, moving sideways. So we'll just have to see what we get. Right now we've got this week we've got the 2 through 7 year auctions starting tomorrow. Typically, under less Fed manipulation, the market was run down on Friday, sometimes Monday. Would rally on the 2 or the 3 year, little lower on the 5 or 10 year, and then sideways to higher on the 7 and 30 year. So we'll see if that plays out. Resistance is the buck right now. We had the last rotate up Friday at 31.5, so 31 to 03, sell 1, 7 to 11, sell 2. On the buy side, we've got a low at 22, 24.5, so this 24 to 20 area, buy 1, 17 to 13, buy 2. What a great weekend it was in Wichita. No wind, humidity less than 40%, and daytime temperatures 75 to, like yesterday we got up to 83. I'm ready for fall. We have had ourselves a summer. Okay, looking at the 30 year, 12 to 16, 1, 19 to 23, sell 1, 31 to 03, sell 2. The selling in equities is being blamed on the strength in the dollar and weakness in crude. The buck to 04 will be number 1, 25, 29, buy 1. And then 13 to 17, buy 2. I think we're going to deal with the Fed meeting in Jackson Hole. I think that probably will pretty well kill activity this week. Looking at gold, sold, got down to our 35 to 37 area. That still looks like reasonable support to me. And 29 to 31, picking up this high volume number down here, would be buy 2. 35 is a low volume number. We get through that, then we should get down to 29. Off the structure, we definitely are dealing with a B right here. So 39 to 41, picking up the top of value, sell 1, 44, 46, sell 2. Looking at the euro. Okay, we've rejected prices below 12.70. We have rejected prices above 36.67. That's about a 100 tick range. Right now, the high volume number held the market. We had this high volume number at 87. We had that next high volume number at 79, so that 80 to 85 is pretty good support. Oh, 75 to 85 by 1, 50 by 2. Okay, it looks like 30 to 40 is resistance, so 30 to 40 sell 1, then 60 to 75 sell 2. Pretty funny comments. There's an article out there. The Fed started a Facebook page, and as usual on Zero Hedge, the comments are where the humor is. The Fed probably will go to active screening, knocking off comments that don't agree with their viewpoint of the world. Okay, 46.95 is a pretty important number. So 47 down here. We got this low at 47.30. Can we take out 47.50? Looks like it. Got this gap to close between the October and September from 47 to, looks like 47.30. So we'll make our first buy 47.25. Like the sell side better. Then 46.50, 46.25. Pick up this high volume area down here. Supposedly this entire rally up to 49.30 has been a short squeeze. We saw it. We played it ourselves. I don't question that. The spill was from 48.15. We're at 47.85. So 48 even, 48 and a quarter, sell 1. 48.50, 48.75, sell 2. I think we're headed lower. I think we're going to close the gap. We're going to see 47. That's my play. And we can't break the 47.50, 47.75 area, then look for a rotation higher. Okay, the E-mini, when you look at it, is just a trading range. The conference in Jackson Hole probably freezes the market, so I would look for the trading range to continue. Bounded on top by 21.90 and on the bottom by 21.65. You can see it may perhaps as low as 21.50. So 21.50 to 2200 is where we are right now. And you can see that we've got a seller above 85 and we've had a buyer against 70. So right now we are pointed lower. If I put that together, it looks like a B. If I add that to it, it's a saddle formation. So selling the 80, 82 area, sell 1. 84, 86, sell 2. The buy side, we rejected prices below 73. We are pointed lower, so we'll play for a little bit lower on the opening. So 70, 72. Get stops below the overnight session low, maybe a little bit more than that. Maybe get stops beneath that. The market knows they're there. And then 65, 67. Really, the 65, 70 area has been a good buy zone for us. The 85 to 90 area has been a good sell zone for us. And I think that's probably what we look at this week. Now the other side of that coin is if the trading community and the 5 largest banks and Wall Street want to send the Fed a big message, anytime there's a hint of Fed might raise interest rate or become hawkish, if they sell the market, that will give that should temper what the Fed's thinking about doing in Jackson Hole. But you can see how these everybody's doing it now. Market couldn't trade anywhere last week because of the FOMC minutes. The FOMC minutes are all the way. Market can't go anywhere at the start of this week because of the Jackson Hole seminar by the Fed. And that's the way that they manipulate and they hold the market these days. It's cheaper than writing a check. Okay, it is going to take a while for me to get stuff up and going. I'm going to get busy on that. I will be with you as soon as possible.